Welcome to Bears in Exile. Today is May 16th, and we're going to look at the Dow, SPX, VIX, TNA, UUP, and FXE. Starting off with the Dow, we had a move down today. I was actually thinking that we would be up today or sideways, and even though it did manage to get high enough to classify for that during the day, it was not able to hold onto it, and we have this little red candle here. Very decent move today. I certainly enjoyed it, not because I'm a bear. I just like it when the market is giving a clear direction, and there seemed to be a significant amount of fear. And we finally did get a close below this candlestick right here. Very, very nice. I definitely like that. And it would suggest that the direction is down. We do have more crossover on the short-term moving averages, not a complete crossover. So really, could it complete its crossover prior to entering the bar? It could. But it's also very likely that we're going to chop around and this will be a partial flatline for a little while longer. But overall, very nice action in the market, and some of the other charts are going to give us some better clues as to what's happening, but I will take a look at the more immediate terms. 15-minute, everything is pointed down. 30-minute, everything is pointed down. And 60-minute, everything is pointed down. So, highly likely it will go down further, but let's look at a few other things. And the secondaries are all ticking down still, and with lots of room to move. SPX, here's the big daddy of the day. Solid move down. And some people would classify this as an inverse hammer, which it could be. The body is a little bit thick for my taste, and the tail not exactly long enough, but some people might see this and say that it is an inverse hammer, in which case a slight bounce could be in order. We have more separation on the short-term moving averages going down into the bar. Notice that there is not much room between the short-term moving averages and the bar, meaning we will not have complete separation and expansion prior to entering the bar. The bar is not as thick as it could be, but I would still place my money on this having some trouble getting through the bar, as it does not have good separation as of yet. However, we do have a close below the candle that we've been talking about in the prior videos, and we have a close below the neckline, which is pretty decisive, and a lot of people, could be running for the doors, be worried, whatever. I'm not that worried yet, because I kind of think that they're going to use the neckline to put the screws to everybody. So, but if we look in the 60-minute, we were talking about the head and shoulders right here, left, head, right, and we have the neckline for that. Notice that the neckline for this head and shoulders seems to be more important than the neckline for the reverse head and shoulders, because although we do have it coming down and kissing this, we also have it coming down and bouncing off this head and shoulders neckline, which was broken today. And we do have a crossover. Everything is pointed down on the 60-minute. The target for this head and shoulders is the 1300 area. It's actually like 1305, but it would make sense for it to come down, hit it, and go back up, perhaps going through the reverse head and shoulders and continuing on its way to fulfill its target. But That is extreme speculation, but I do believe that putting the hurt to as many people as possible is in the cards. So certainly we should expect after this goes down as far as it's going to go, that it should turn around, come up and hit that neckline again, and then fall down. You'll notice that we have the reverse head and shoulders neckline and the head and shoulders neckline here, and they converge. So if it were to turn around and try to hit both of those at the same time stacked, that would be pretty interesting. That it was able to get through both of them right here as they converged is also very interesting to me. But and similar to the Dow, I mean, we could have certainly bounce back up and have a partial flatline for a while to come. It definitely would throw a lot of people off, and I'm kind of counting on that. But if it falls apart, hey, that's great too. If it goes up, that's great too. So I would much prefer it going down or going up than chopping around and hurting everybody. And then we have the VIX, and the VIX is mirroring the S&P quite nicely. We do have full expansion going into the bar had curled up, so it putting the hurt on the bar makes sense, and it did today. The candle popped out the other side. The short-term moving averages have bitten deep, and we do have a hammer candle today, which would also suggest an uptick tomorrow and a downtick on the VIX, if it was solely based upon the candle. If that's the case, it'll be interesting, because then you could say that we have a high here and a lower high here, but if we continue to chop, that won't matter. So beyond perhaps this clue of this hammer, there isn't too much to be said if we are still chopping. We still need a little more data to confirm what it is that we're thinking. And this will conclude part one. I'll do a second video which will comprise UUP, FXE, and TNA. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.